Hello there, I'm Azara Tagaya. Welcome to Ringgit Cents Plus. Today we're talking about credit cards. Now, from the very first time they were used in the 1950s in the US, the credit card has evolved greatly in use and accessibility to the modern day credit card that we know and use today. Now, if you don't know how a credit card works, a cardholder can basically borrow money for payment to a merchant or as a cash advance. So basically, a bank will allow you to spend a certain amount of money, say up to 5,000 ringgit, using the card, and then you have to pay it back before the end of the month. However, if you don't pay it back in full, then you will be charged interest. Now, credit cards are pretty useful for shopping online, paying for large amounts, and different cards will have different reward benefits too. However, you've probably heard about how uncontrolled spending with a credit card may lead to huge debt. So, should you get a credit card or should you hold back? Now, we spoke to a few financial experts to get their thoughts. The first person we met with was Han Liu, the CEO of RinggitPlus, an aggregator website from which users can access in order to apply for a credit card. According to Han, credit cards are very useful but can also be dangerous when used wrongly.
Credit cards are exactly like that, which is it can be very, very, very useful, right? How useful? Right? You can use it to pay for things. You can use it to pay for things first and then you pay later. You don't have to carry a lot of cash around. Very, very useful, right? But if not used carefully, just like fire, it can be very dangerous.
We also met with two financial planners, Felix Neo and Rajan Devadasan, to ask them about the pros and cons of having a credit card.
The credit card comes with a lot of benefits, such as, collecting points, exchanging those points for gifts and all that kind of thing. So that's another reason why people like to go for credit cards. For those who may not have any other credit, loans and all that kind of things, one of the reasons why you should have a credit card perhaps is to also establish a credit history in that sense. So those are what I look as the pros of having a credit card. However, there are the cons of the credit card as well, right? Because a lot of people will just, go shopping and then they'll swipe the card and that's it, right? Money is spent. But there is no tallying back, what did I really spend? And then when the month-end bill comes, that's where you're almost, so-called almost falling off the chair. So that could be one of the areas that may set people back if you don't have a good handle in terms of how much you've actually spent through the credit cards.
Very few people, I think, when you look at the whole setup in Malaysia, very few people have internal makeups that dictate that they shouldn't have credit cards. Most people are fine, and so the short answer would be for the majority of people, having a credit card makes sense. And for professionals and business people, it actually makes very good sense to have two different credit cards. One for your personal expenses and one for your business ones, so that you don't intermingle and it becomes much easier.
Nowadays, with the advancement of debit cards, with the MasterCard and the Visa card convenience for debit cards, it actually helps ease the whole payment process. So you don't really need a credit card as much as you probably needed it in the past. So one or two should be able to, help you in terms of payment convenience.
The important thing to remember is that you shouldn't spend beyond your means.
Right. For somebody who uses a credit card well, what I mean by well is you pay for things with a card, you pay off the balance next month, right? Before the interest comes due, you're using it well. Then there's no minimum maximum. You can use as many or as little as you like, because that's the right way to use a card, right? To make payment, you don't carry cash around. Right. For somebody who can't even use one card, meaning you use it as a short-term loan, instead of actually getting a loan, credit card interest is way, way higher than any loan out there, right? From a bank or a financial institution. So if you are the type to do that, then you should not use a single one even.
Now, if the individual in question feels that, maybe I'm not so great at handling this, perhaps do away with the personal credit card. Either go all cash or go just with a debit card. And for the business side, have a credit card and be very, very strict with yourself so that it's only for business expenses. Now, I don't think large companies are guilty of this, but lots of small companies, when I talk to my clients who work for smaller companies, I find that many of them have this particular problem, that the company uses the employee's credit limit to roll its own cash. So in other words, the person goes out, does the entertainment or buys stationery or whatever else, and either because the company's cash flow is not so great, or basically the company's owner thinks, well, let's see how long I can roll this. And instead of getting your money within 2 weeks of putting through a claim, sometimes it takes 2 months or 3 months. Now, during that period, how do you, as an employee who presumably doesn't earn a great deal of money, how do you make sure that you're not rolling as well, and then you don't complete paying off your credit card balance? And as a result of that, let's say you only do your minimum 5%, or you do 10% or 20% or whatever, that balance is going to carry interest. There's no way you're going to be able to go back to your boss and say, claims were late and there's an interest charge. So I think in situations like that, employees need to stand up for themselves. And if it turns out that this particular company, their employer, is taking advantage of them, I think they need to say, no, if you want me to do this, then you actually have to give me a larger advance, or I'll only use my credit card for smaller expenses.
After the break, we'll be giving you tips on how to clear your credit card debt. Now, if you want to learn more about personal finance, find us online. We have previous episodes on our Facebook and on our YouTube. See you after the break. Welcome back to Ringgit Sense Plus. Today we're talking about the pros and cons of having a credit card. According to the Credit Counseling and Debt Management Agency, or AKPK, the #1 reason for bankruptcy among youths is credit card debt. So the temptation to spend beyond your means is very strong when you have a credit card in your possession. Once you get the bill at the end of the month, you will soon find out that you may be living well beyond your means. We asked personal finance experts, what are the best strategies to pay off your credit card debt? According to Felix Neo, one option is to take out a personal loan to pay off your credit card debt.
Bearing in mind that credit cards come with a minimum interest expense or charge of about 15%, then I suppose the question you need to ask is, can you convert that into a personal loan, right? Because certain personal loans from licensed financial institutions may carry an interest rate that is much lower, right? And one of the reasons why I would like to suggest, I do this to some of my clients is simply because a personal loan has a set repayment schedule, right? So long as you stick to that, right, you will eventually pay off your loans. The problem with credit cards is it's on a revolving credit line, if you like. That means every month, after whatever you've paid the minimum, you can use whatever's left of the credit. And then that's the reason why it's a spiral.
You may have heard of credit card companies offering to transfer all of the amount you owe from your current credit card at a lower interest rate. While it may sound attractive, according to Rajan Devadasan, it's not advisable for those who already have a problem controlling their spending.
What's really important is for people to also realize that whether you run your own business, whether you're an employee, you only have a finite amount of free cash flow per month. So in the past, let's say it's one credit card, so it's easy to handle. Your one credit card, and it's full to the max, okay? And you can't really use it anymore because there's no more credit left. And then you get this, you think it's like, it's like a blessing from heaven, you think, basically, because someone comes and says, let me offer you. And so you do a transfer. Let's keep things simple. Let's say it's a 10,000 ringgit credit limit and you've got 9,900 ringgit. And so you transfer 9,900 ringgit to this new term loan, and maybe the terms are you pay over 2 years or 3 years or whatever. So now your cash flow is better. But what you've done is you've suddenly gone from having a credit card that's almost full to now it's empty. But the credit limit stays the same. And now you've got this brand new term loan that you must go and finance. Now, if you had trouble at the beginning, Imagine the kind of problems you have as you continue if you do not adjust your spending patterns.
If you're looking purely from an interest expense perspective, right? 15% versus 0% interest, sure, why not, right? However, don't forget, very often those kind of offers come with new credit card applications. So that means you must be so-called credit worthy enough to be able to, secure a new credit card, right? So balance transfers, I think it's okay, right? So long as it is not a means of ending up so-called racking up even more credit card debt, right? Because then it defeats the whole purpose.
According to Rajan, the best way to pay off all of your debt is to actually line them all up and put the one that charges the highest interest rate at the top. Take, for example, this chart here. Now, we have credit card debts with 15% interest per annum, a home loan, car loan, and also a loan from your parents with 0 interest. Arrange it so that the one that charges the most interest rate is at the top. Now, when you have a surplus in your monthly budget, start paying extra to the one with the highest interest. Since the credit card charges the most interest, pay this one off first with your surplus. So how do you get a surplus? Well, your options are you can either get a second job or cut down on your expenses. Make sure you're also paying the minimum amount for all of your loans and pay early instead of just on time. This will establish a good credit history for you. However, Rajan warns this is only for those with strong financial discipline. You need to stay true to your budget and pay off your debts consistently. Now, if you can't do that, there's another method that you can try.
So the other strategy is you list all your loans, again against APR, but this time you put the smallest loan at the top. Second largest, third largest, fourth largest, biggest. Same thing, meet all your minimum payments, make very slight additional payments, but to the one at the top. But remember, this time the one at the top is the smallest loan. And because it's the smallest loan, it'll disappear very quickly. And if it disappears very quickly, for people who have been struggling with debt for many, many years, and they cannot see light at the end of the tunnel, to see a loan disappear is incredibly uplifting, and it encourages you, and so you are inspired to actually work harder, work smarter, manage your money better. And so for most people, even though the first approach, rank by interest rate, is mathematically more efficient, the second one, ranking from smallest to largest, in my opinion, and certainly through my experience, is psychologically more effective.
Ultimately, having a monthly budget and knowing what you can actually afford is the best way to avoid credit card debt. Go through your budget and get your priorities right.
Number one, pay yourself first. That's what they always say. That means saving and investing a portion of your monthly income. And then from there, establish what can you really afford to spend, right? The amount that you decide should not be one that will crimp your lifestyle, so to speak, but still enable you to have the kind of lifestyle, more or less, that you would like to have, right? So that basically having a budget is very important. And as I have mentioned, ideally, credit cards are just a means of helping you make payments. So as long as cash payments, credit card payments, prepaid cards and all that, all those expenses add up, to, according to your expense budget, then I think you are on the right track.
If you really need help and someone to talk to, you can always talk to the Credit Counseling and Debt Management Agency, or AKPK, to restructure your debt. Now, we don't mean to scare you about credit card debt, but you need to know that if you're going to have one, you need to manage it wisely. Now, after the break, we explain the various rewards available when you apply for a credit card. Which one is the best one for you? We have the answers after the break. In the meantime, do check us out on Facebook and YouTube for more financial tips. Welcome back to the show. Now, if you just joined us on Ringgit Sense Plus, we're talking about the pros and cons of credit cards. Now, with so many credit cards in the market, consumers can pick from various types of cards that offer different rewards. There are those that offer points and also cashback rewards. So, how does it all work?
The best way to think about cashback is discounts everywhere, right? So if you get a 1% cashback card, it's pretty much like having a 1% discount everywhere, right? If you get a credit card with 2x points or 5x points, it's a bit like getting a bonus something, right? A free gift. What is a free gift? A little free gift, but the free gift is a point, and the points can be used to do something else. So the best way to think about it is cashback cards, discount everywhere, rewards points, a little free gift for every purchase.
Applying for a credit card is quite simple, with websites like RinggitPlus offering free gifts to users who apply for one from their website. Consumers have many options to choose from these days. However, you do need to meet the basic requirements.
The basic requirements are you've got to earn at least 2,000 ringgit a month of salary, income, whatever you call it, and you've got to be above 21 years of age, right? So that's the basic level requirement. In terms of whether you get approved or not, there's a whole lot of different things, right? In terms of your existing commitments, if it's too high, you might not be allowed, and rightly not be allowed to get another card or another loan. If you have uncertain income, so you don't have a salary, you maybe have a lot of variable income, whether it's a commission or a bonus or incentive, then that comes into play on whether or not you can get approved, or whether or not a bank will give you a high or low credit limit.
The approval time usually ranges from 1 day up to 21 days. For those who want a Sharia-compliant credit card, there are also Islamic credit cards. They don't charge interest but work on a different concept. For the end consumers like you, there isn't much difference. However, the major difference is that you can't buy products that are deemed haram with the card, like alcohol.
Here at RinggitPlus, right, our role is to do two things, right? The first is purely about education and comparison. Let me help you learn about what these financial products are. It may be a credit card or a loan or whatever. Let me help you learn about them. I'll put it in simple language, simple English, and soon simple Malay on what these products are. Get educated so you can make the right decision. So that's one thing. And why else would you come to RinggitPlus is that we make it easy for anybody, once they made the decision already, right? Smart already, educated already, to actually apply for the loan or a card and get it, right? All digitally. You don't have to speak to anybody. You don't have to meet anybody. You don't have to fill out a bunch of very, very boring paperwork, right? You can do it all online right off our mobile website, right? So that's why we hope someone would come to RinggitPlus. We also have some great offers from time to time. We work with our partners to craft really curated offers for customers. But ultimately, it's all about helping people get educated and helping people with their application.
We also asked Han, when is the best time to pay off your credit card bill? Should you pay it right away or just before you get charged interest?
The best time to pay, honestly, pay off your credit card bill or debt is the last day of the credit card due period. Why? Why is that? It's because, simply put, you buy something today, you get the bill end of the month, and then you have another usually 21 days after that to pay for that bill without getting any interest, right? So for me, that's like interest-free for a whole month or more. So the best time to pay off and you should pay off in full, is at the end of that time. Now, not everyone can do that every month, right? Right. So I usually say, well, give yourself some time and fix a date every month after your bill's due to pay it off, and you can benefit the most from using that card.
It really depends on whether they have a solid grasp of their finances. If they do, cool, no problems at all. Then by all means, pay toward the last week, but just make sure that you don't make a mistake, because such mistakes are very costly.
While all the benefits, discounts, and rewards that come with a credit card may look attractive, remember, you should always stick to your monthly budget.
The perception is always, I want to save money with a discount, right? But the only way that you can save money with a discount is that you must first spend money, right? So you have to spend in order to save. And some people are looking at it from that kind of a saving perspective, rather than asking the main question, or the most important question, and that is, do I really need that? Right? Is that item that I want to spend my money on part of my expense budget already? Is it, so-called something that I had in mind to spend on? But if it is not, and if you are just merely trying to take advantage of a sale, if you like, in order to enjoy that discount, I think that is when you may get into trouble.
Well, we hope the pros and cons we shared today about credit cards will be useful in helping you control your spending. If you find that your personal finances is a mess and need to talk to someone to help make over your monthly budget, or simply want to achieve a life goal, say saving to buy a house, well, drop us a message on Facebook. We'll get you in touch with a licensed financial advisor. If you want to share today's interview with your friends, you can now do that online. I'm Azara Tagaya. Invest and save wisely. See you next week.